Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a look at the action in today's session, Wednesday, August 2nd. And it was an ugly day on Wall Street. Stocks getting hard on that Fitch downgrade of U.S. debt, and growth stocks can hit particularly hard today.
Yes, indeed, and a bit ironic because we had this great piece of economic data before the open, the ADP private payrolls up much more than expected. That could bode well for another strong jobs report Friday, but yeah, quite a sell-off in the stock market today. We did find three stocks that look interesting here in the biotech space: Vertex Pharmaceuticals, VRTX, in the retail sector, OLLI's Bargain Outlet, and finally, the best performing industry group today was the Insurance Brokers Group, up more than 5%. So let's take a look at Arthur J. Gallagher, AJG.
Sounds like a plan, Ken. First, let's analyze the major indexes. Today, the NASDAQ down 2.2%, definitely the hardest hit today. The Russell 2000 down 1.4%, same for the S&P 500, and the Dow off by 0.1% here, and the NASDAQ undercutting some notable technical levels today.
Yeah, look at the Nasdaq, that sharp break of the 21-day exponential moving average. Now it did that. The last time it was below the 21-day line was all the way back in early May. Yeah, right in that level here, but it has been support level. You can see two times when it fell below that 21-day line, it didn't stay long underneath it, but there was some volume behind the decline today. You can see the much higher volume on the Nasdaq. So this is really an unequivocal, what we call a distribution day. You mentioned growth stocks really sold off. A lot of them quite violently with declines of more than 5, 6, 7%. So. Yeah, tough day for the market. I think the market's reaction tomorrow is going to be important. Are we going to rally back in light volume? Are we going to rally back in heavy volume? Or are we going to extend losses and possibly pay a trip to the 50-day moving average here?
Exactly. A key test for the market rally this week. We still have 2 trading sessions to go, and we're calculating all sorts of different scenarios that could play out. How resilient is this market? We could get some clues in the coming sessions. But even if we do get more selling, which is the expectation, I think, when you see the kind of weakness like this, if we do immediately reverse higher, an expectation breaker in a positive way, right? To see a reversal of that trend. But even if we do come down more, I mean, we've talked about this being a seasonally weak period that we're entering. Even if you look at past roaring bull markets, a pullback to the 50-day line and some sort of digestion or consolidation along the way is far from out of the question.
Well, I mean, you can see the Nasdaq really hasn't consolidated much since it broke out over that 12,000 level. I mean, it did, it came up close to that 14,000 level and pulled back for a couple, maybe 2 or 3 weeks, and it's pulled back here. But yeah, I mean, if we were to come down to the red line, the 50-day moving average, that looks like a pretty tame pullback in light of the Nasdaq's gain since the move above 12,000. I mean, the Nasdaq, what is up, still up 40% or so this year. So it's it may be ready to digest some gains. If it does, again, a pullback to the 50-day might just be the pause that refreshes. We're still in a confirmed uptrend. If we do get a decisive break of that 50-day line, that could change things. But again, we'll watch how the market reacts tomorrow.
Mm-hmm. Yeah, and then in terms of just in general broad strokes of how investors should be handling their portfolios, this is something that we talk about on IBD Live every day. Is it a good time to be adding exposure, reducing exposure, looking for new buys, adding to existing positions, et cetera, et cetera? And it seems like the biggest factor is for the leading stocks in your portfolio, how big of a profit cushion do you have? Because it's likely that you're going to be treating those a little bit differently than newer buys?
Well, we had a lot of selling in the leaderboard model portfolio today. We were about 90% invested headed into today, and after today, we're now maybe right around 70%, maybe just a little bit below that. So we were definitely playing some defense. We still hold 11 names that were bought, generally at the right time. So we've got decent profit cushions. But when we decided to trim some names today, so it was usually because of a kind of a violent break of a key support level. In a lot of cases, the 21-day exponential moving average. That's what people should be doing right now with their portfolio. Just taking a look at the stocks that they own, who are the leaders that you can give a little room to, or who are the laggards that are just not working. And now's the time to be playing defense when you get the volume behind a decline like today, and again, a lot of 6%, 7%, 8% declines in some top performing growth stocks. That's just clearly a sign to play some defense.
Yeah. Quickly take a look at the other indexes. Here's a look at the S&P 500. Looks like it did manage to close above that 4,500 level, but still a pretty sharp decline, putting it right around that 21-day line, Ken.
Yeah, so I mean, this is sort of, I guess, a silver lining, a cold comfort. At least it wasn't a violent break of the 21-day line here. And volume, you can see it's very close call. So we did see much higher volume on the Nasdaq as a lot of tech stocks really got clobbered. But selling in the S&P 500 looks like volume is going to be a little bit lower than what we saw yesterday, and volume was pretty light yesterday. So this is a key test for the S&P 500, but because it's not a decisive break here, it's certainly an index to watch, and maybe it rallies back tomorrow, and it ends up being a support level here.
Mm-hmm. The Dow also has shown strength as of late, and it's now only below its 10-day moving average and still nicely above the 21-day line, Ken.
Yep, still looks good, holding the 21-day line. It would be a pretty big pullback for the Dow to get back all the way down to that 50-day moving average, just above 34,000. So if we do see some more market weakness, you'd expect the Dow maybe it'll come down to that 21-day line and make an attempt to find support. But it's actually, when you look compared to the S&P 500 and the Nasdaq, the Dow's not looking so bad these days.
Yeah, and here's a look at the Russell 2000, which bumped its head against that 2000 level a couple of times and is getting turned away there now.
Yeah, but still, I mean, if you're a glass half full type of
Yeah.
person, and you're still, bullish about this uptrend, and maybe this today was just the start of a kind of a modest pullback, then you'd expect the Russell 2000. It's still in position for a move above that 2000 level, so still looks good, holding above the 21-day moving average. But yeah, 2000 is the level to watch here for sure.
As one of our colleagues likes to say, I like the cut of your jib there, Ken. Glass half full there. I like
That's
it.
right.
Okay, well, let's take a look at the 10-year Treasury yield and the dollar. It's almost been like a broken record from us, Ken, how much we've been saying, watch that 4% level, watch that 4% level, watch the 4.09% level. And that's exactly what we're doing. So, talking about something on the verge of a breakout, the 10-year yield is, but doesn't seem like the market would be too happy if we continue to see the yields go up like this.
No, and in fact, the 10-year yield went all the way up to 4.12, almost 4.13% today, the highest level since November, I think. And then you saw yields back off high, so the yields are starting to get some resistance around this 4.09% level. So even as yields backed off, you would have thought that might have given stocks a little bit of a bid, but really didn't help the market much. But I was talking with colleague David Chung about this, that this 10-year yield still has a lot of overhead to work through here. We saw a little bit of it today as it tried to cross that 4.09% level. It did back off high. So we'll continue to watch that 10-year yield. People continue to debate where the Fed is at in its fight against inflation. Market thinking there may be one more rate hike before the end of the year, but even that's not a sure thing. So, rising interest rates, a strengthening dollar typically is not so great for the market. Anytime money gets more expensive when interest rates are rising, it can slow things down. Money just becomes more expensive. Loans are more, paying higher interest rates on loans, and just money more expensive is a serious headwind for the market.
Mm-hmm. All right, and up with the yields. Up goes the dollar. UUP here, Ken. You've been on it like a hawkeye, eagle eye, with taking a look at that 200-day line. Is it going to be resistance? Are we going to see it take it out? And right now, we're seeing UUP taking out that level.
Yes, 2872, 2860. These are still levels to watch here. It's been quite a move for the greenback over the past couple of weeks. Moved above the 200-day moving average, but just like that 10-year yield, for the 10, it's not a straight move higher for bond yields, and I think the UUP could run into a little resistance here around those levels that I just mentioned, including 2872. So we will see, but the market does seem to be moving the opposite direction of yields and the dollar lately.
Okay, and here's just a quick look at SMH. A lot of damage in the chip sector today, Ken. SMH down 3.7%.
Yeah, just like the Nasdaq, just a break of the 21-day moving average here. So we'll see if it eventually becomes a test of the 50-day line. You can see volume was heavy in SMH, much higher than what we saw yesterday. So looking like a test of the 50-day is going to happen here, and we'll see if it holds. If this market is indeed strong and there's underlying strength, we didn't see any of it today, but it had been acting well before today. You'd expect that SMH to firm up at that 50-day line.
Ken, let's get your thoughts on Vertex, a winner in today's session, up 3% in some volume, bouncing off of a key level.
Yeah, pretty good earnings report and product guidance, full year product revenue guidance, a little bit ahead of expectations. Obviously, a dominant player in cystic fibrosis with several marketed drugs. Highly profitable biotech, not growing at the same rate that it once was, but this was a nice bullish move off the 50-day moving average. Moves back into a buy zone. So who knows? Maybe biotechs are ready to get going here. But I think Vertex is a stock that looks good in this market. It was a heavy volume move today, and see it's kind of sitting in that blue shaded area, which tells you that it's in a buy range here.
Okay, let's go to OLLI. This is Ollie's bargain outlet. That's some pretty tight action there, Ken, after a
Yeah,
breakout.
definitely, and nice move above that 66 level. Had some decent volume. You can see the accumulation distribution rating of A minus, and then this has just been really kind of trading right around the 10-day moving average. Earnings are coming out in a few weeks, but really like the way this one is trading on my watch list. If you go to the weekly chart, this is exactly the type of action you want to see after 3 straight solid up weeks and just kind of tight trading near highs. I think Ollie's is making a case that we could see higher prices. That'll be predicated on what the company has to say when they report earnings next. A few weeks away for that, but good watch list name here.
And AJG, where we'll wrap things up, putting together 2 gains in a row here. So some nice strength here today as well.
Insurers tend to benefit in a higher interest rate environment. So with interest rates kind of moving higher here, not surprising to see the insurance brokers group today. I think it was the #1 performing industry group in our database out of 197 that we rank based on 6-month price performance. But the group was up more than 5%, and Arthur J. Gallagher is in a buy zone here as well. They reported earnings a few days ago, and the stock fell, and it's back above its short-term support levels here, and in a buy zone. These insurers could end up being a safe haven trade as the selling in the technology sector kind of works itself out.
Mm-hmm. And Ken, do you know if this is a long-term leader? I'm just looking at this strong
It is.
multi-year EPS growth rate and very stable, steady uptrend. So, yep,
It's
long-term leader there.
it is a long-term leader, and all of our long-term leaders are going to have monthly charts like this. Those stocks that just trend well with a very consistent, stable track record of earnings, and it's made a tremendous move. I will say, if you go back to the weekly chart here, I'm not sure if this stock ever technically reset its base count.
Mm.
It did have some pretty sharp pullbacks, so some might
Yeah,
argue this is oh, there you go. Yeah,
that's
that's a
the
little
reset.
base. Yeah, there you go. Okay, that's a little base reset right there. So,
Yeah,
yeah, so it's looking good in a buy
great.
zone here. Top fundamentals, and you can see good earnings estimates going forward. So, seeing some stocks buck the trend today, and that's what you want to pay attention to. But rough day for the market overall.
No doubt. Well, thank you, Ken, and thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live. We hope you join us, investors.com/IBD Live for all the details. We'll see you there, and we'll also see you right back here tomorrow at the close.